And welcome to CohnReznick's webinar, Transforming Business Systems to Fuel Growth with NetSuite. Thanks for joining. Today you'll hear about how growth companies are graduating to unified business systems, including NetSuite, to drive profitable revenue growth. You will hear how NetSuite can quickly improve your company's productivity and efficiency, enable informed decision-making, and most importantly, eliminate business risk, all while incurring lower IT spend. I will now turn it over to our experts. First, John Yin, who heads up CohnReznick CIO Advisory Practice, and then Mark Freeberg, Senior Manager of CohnReznick CIO Advisory Practice. John?
Thanks, Brian. I'm John Yin. I'm a partner with CohnReznick, and I lead our CIO Advisory Services and ERP practice, as Brian mentioned. I have over 25 years of management and technology consulting, and our focus is really to help clients leverage technology to enable significant business process improvements. Mark?
My name is Mark Freeberg, and I'm a Senior Manager with CohnReznick. And like John, I also specialize in IT strategy development, system selection, and project management. I lead CohnReznick's NetSuite practice. I've led large-scale, complex ERP implementations, including supply chain systems, demand planning and forecasting, EDI, warehouse management systems, and business intelligence. My industry-specific experience includes the automotive aftermarket, consumer packaged goods, distribution and manufacturing companies, as well as financial services.
So CohnReznick, just to give an overview of what we do, we are a full-service accounting, tax, and advisory services firm. We were established all the way back in 1919, so we're coming up to our 100-year anniversary. We represent the technology space of the advisory group, and as part of that, we help companies with IT strategy through system selection and systems implementation, so really the end-to-end life cycle of technology. So today we want to really talk about the top 5 warning signs of when a company might have outgrown their accounting systems. And while every company is unique and different in that respect, we hear some common themes from our clients over the years, and we want to share some of those stories with you. Also, the market has changed in recent years in terms of being able to leverage the cloud. So there are a number of trends with both cloud and specifically ERP in the cloud. And one of them is NetSuite. And we want to just talk about some of the value proposition that NetSuite has to offer its clients and prospects. And we'll talk about a specific case study of a company where there was a NetSuite success story in migrating from a legacy platform. And we'll conclude with some Q&A with the group on the call. So in terms of the top 5 signs, I want to first talk about the overall technology life cycle. When we look at the technology life cycle, you can really break it down to these 3 major stages. Having an IT strategy really helps to answer the questions of why or when we need to invest in a new technology platform. The process then is to really do a system selection. Now there are different ways of approaching system selection, but that really helps to address what to implement. And finally, systems implementation is really how to implement it successfully without introducing a lot of risk in a complex project like an ERP implementation. So in terms of the whys, we're going to talk about what's typically the top reasons companies invest in a new platform. Now, how we identify those reasons can come from an IT effectiveness assessment. You might look at your system strategy, your IT strategy, whether it's aligned with your business strategy. Sometimes it's to address risks to the organization in the from the standpoint of either competitive pressures or customer compliance issues, or just overall compliance with your products that you're delivering. But ultimately, you would want to have an IT roadmap that supports your business strategy, because what a lot of companies don't appreciate or build into their planning process is that putting in a new ERP or a large IT initiative can take years. And if we don't plan ahead of time or with enough lead time, then your business model might be changing, and then you can't support your business needs for a significant period of time. So in terms of the system evaluation process, there's definitely a structured approach that we often use. It's an accelerated system selection process. But in some cases, you may be able to shortcut that process by doing a fit gap to a particular solution. And what we're finding is that for certain companies of a certain size or specific industries, NetSuite is a very full-featured solution that oftentimes allows companies to quickly migrate without doing an elaborate full-scale system selection project. And we'll talk about some of the situations where we've done that. Like I said, the system implementation aspects of the life cycle is very complex, and we would be happy to have another offline conversation, but it's really beyond the scope of this discussion to talk about the program management and organizational change management success factors that go into a implementation. So again, before we talk about the top 5 drivers for investing in a new solution, recognizing the trigger points, it might be helpful to just look at what the typical journey a company might go through as they start to put in technology into their company. Oftentimes, if it's a small or growing or entrepreneurial company, they may start off with a basic accounting system as their backbone, such as a QuickBooks or a Sage or a Microsoft Dynamics, which are all fine for basic accounting. But then as they grow and the business becomes more complex, they'll start to add more systems or solutions. The first thing, of course, is to supplement with Excel for reporting and analysis, but oftentimes they find that they start building custom solutions or applications. And there are a lot of downsides to having custom applications, which we'll touch upon later, because that extends the need for integrating those custom solutions. Similarly, for non-integrated systems, kind of what we call point solutions, they might add on a CRM solution or WMS, warehouse management solution. All these point solutions then too add complexity and have a lot of downstream maintenance impacts. So the point is, over time, companies will end up investing more money and more resources to support, the complex integrated environment, and yet over time, information is less available and less reliable and difficult to extract from this complex environment. So if we look at the functional requirements of businesses, not everyone's a manufacturer, but potentially you can have individual applications for each and any of these functional modules, if you will, on the left here. And you can see that each one will have outputs and data needs that really need to be synchronized and shared across all of these functional modules. And when you then say, well, how do we consolidate and report on this? Everything has to feed to the general ledger as the system of record. But what happens is that you'll have a lot of detailed and granular transactions in these subsystems that won't carry over to the general ledger, So when you have to do any kind of detailed reporting or analysis, you end up with something like this, where you have to build a lot of custom interfaces, you have to spend a lot of time and resources just keeping the data in sync. And that's all non-value added time. But more important than just the efficiency aspects, this has a direct impact on your ability or your company's ability to produce value that's going into the product or to your customer satisfaction. So if we can simplify that with an integrated ERP platform that has financial, sales, distribution, master files such as customer master, supplier master, all consistently used across all the modules, you can quickly see how much less is required from a support perspective. And that's what we're really talking about, is how can we get there cost effectively in today's world? What's changed that really enables that to happen? So before we go forward, for people who are looking to respond to the CPE questions for the CPE credit, the first CPE question is, how prepared is your company to tackle a new ERP system? And we'll just give a few seconds for people to respond, and we'll be able to show the results real time. Okay, just looking at the results, it seems that a good percentage are somewhat or very prepared in evaluating your system. So it sounds like a lot of you are in the process of evaluating and considering new systems. So hopefully this is going to be a very relevant discussion for you guys. Okay, so if we move to specifically the top 5 reasons that we most commonly hear as drivers for selecting a new system or migrating to a new system. I'll talk about each one in detail, so I'll just move forward from here. So first, in terms of what's changed with the advent of cloud ERP like NetSuite, companies are able to really get Tier 1 functionality without the Tier 1 cost and maintenance. What that means is when we say Tier 1, what we mean is the traditional, SAP, Oracle, Infor type ERP solutions, which they all still have their place. So we're not saying that those are outdated by any stretch of the imagination. But what we're saying is that companies that, let's say, are 50 million, their needs may not be any different than a company of 500 million or 3 billion. They typically serve a lot of the same customers. They buy from the same suppliers, and customers and suppliers often drive a lot of the compliance and business complexity that an organization needs to support. So for the longest time, companies down at the lower end of that spectrum, they had to live with less robust systems because of just the cost of entry into the Tier 1 platforms. And again, so today cloud technology has matured to a point where that playing field is more at a level playing field. And what are the implications of the traditional environment? You would need to have a data center. That is the key differentiator. And having a data center means you have to staff that operation of that data center, whether it's the hardware side, the infrastructure, the application maintenance and support. So in addition to the hardware cost, there's the people cost, and the cost of entry historically has been in the hundreds of thousands, if not in the millions. Today with cloud, and we'll talk a lot more about what cloud really means, you really just need to invest in the desktop as your browser, and then your support comes from the vendor, and you won't have to invest in the staff to support that, and the software is continuously maintained and updated for you. And if we look at what we talked about earlier in terms of business processes, the legacy environment, if you can imagine all the boxes in orange being of different color representing a different system, you can quickly see how inefficient that model becomes. So not only do you have a lot of manual processes and paper transfers and a lot of time and effort spent on reconciling data as opposed to leveraging what the data can really help management make decisions, having that integrated view with data flowing back and forth in real time really helps to compress the cycle time for processing orders and other transactions. So you can even think about it from the standpoint of how long does it take to close your books on a monthly basis? That oftentimes is a symptom of how complex your system environment is, because the longer it takes to close your books, that means you're trying to get accurate results at each subsystem level and aggregating those up. You may have to do manual accruals and deferrals. So it just compounds itself the more systems you have. It also has a downstream effect in the sense that it's not a one-shot deal where you build the interfaces and then things work smoothly. Every time you try to change your process to adapt to a new business requirement, you have to rework those interfaces or the customizations that you made. In terms of the third most reported reason is that there's a heavy dependency on spreadsheet-based accounting. So even if you have an accounting software like a QuickBooks, more than 70%, according to some surveys, are relying on spreadsheets to develop the financial numbers that then they input into the GL. So that's a pretty scary thought. But even scarier is that another survey shows that more than 90% of spreadsheets contain serious errors, yet if you ask the users, they believe 90% of the users are convinced that their models are free of errors. Not a good combination. So in terms of better management reporting KPIs, when companies kind of are growing over time, a $10 million company or less, you might be at a stage where you can still keep track of things based on people's knowledge of the business, and the communications are frequent and tighter. But when the company is growing to 50, 100, or 500 million, you really have to rely on robust systems to keep track of all the aspects of your business. But then you have to make a significant investment. So in the past, that gap between the mid-space, the 10 million to 500 million, they were really under-supported with integrated ERP that was cost-effective. So really, NetSuite helps to close that gap. And finally, the last point, and possibly the most important point, speaks to actual functionality of the ERP solution itself. Having a an accounting system doesn't necessarily provide the robust operational functions that companies need to grow with. Specifically, you may have to change how your processes work to be more efficient. So you need to easily reconfigure how things are, what the data flow is, what the workflow is. You may need to have more flexible business rules to automate processes and transactions to, again, be able to respond to competitive pressures, customer demands, working more efficiently with your suppliers. Having the ability to easily import and export data. And as companies grow, you may become multinational. And one of the key things that we've seen is that once you get into multi-currency, multi-company, a lot of the entry-level accounting platforms can't support that. In fact, we have clients who finally had decided to migrate to an integrated ERP because they had over 20 instances of an existing software package, each set up differently to support the multi-company, multi-currency needs. So this helps to just give further examples of how companies may evolve and the business growth or change may drive their need to invest in their technology platform. And even if companies aren't necessarily growing, their market environments and market pressures are always changing. And that may put additional pressure for companies to be able to react to those conditions and requirements. So when, as an example, if the core business was a US-based distributor, but then through acquisitions, now they're a manufacturer, what do? Do you just leverage the existing systems from that acquired company, and then you have to deal with integrating everything because your core platform doesn't support manufacturing? So those are some of the key decision points that companies need to make over the life cycle. Similarly, if you're going global and you're working with partners and you now have to leverage more in terms of electronic exchange, e-commerce, EDI. There are a lot of companies that will say they have EDI just so they can do business, but then those EDI records come in and they have to download it into a spreadsheet and manually enter those as transactions. So anyways, the conclusion here is that these are all examples of key trigger points, but they could be many. So one thing to think about is just how efficient your existing processes are from a cycle time and a customer and supplier compliance standpoint, and those will help you decide whether it's the right time to consider migrating to a new system. So now we're going to our second CPE question, and to really summarize what business challenges are causing you to consider a new system, we'd like to hear what your top two are. All right, thanks for responding. It looks like 2, 4, and 5 are the top choices or situations. So no real-time visibility to drive better business decisions, too much time replicating and reconciling data, so both are somewhat related, and then too much work done outside of the accounting system. That really lines up with our themes. Okay, great. Thank you. I'm going to transition over to Mark, who's going to take us through the trends of cloud and then specifically the NetSuite value proposition.
Thank you, John. So I'm going to talk about current trends in cloud computing. And it's very difficult today to have a conversation without talking about cloud computing directly or indirectly. Companies of all types and all sizes across all industries are providing cloud solutions and also subscribing to cloud services and solutions. In tough economic environments and ever-changing expectations, business leaders such as yourself are required to deliver outcomes faster and cheaper, but with fewer resources. And for businesses of all sizes, cloud represents a tremendous opportunity as a de facto standard of doing business today. It's no longer just a trend, it's in the mainstream. Just this morning I read an article in the paper about Amazon Web Services and that they've reached $10 billion in revenue and are the most profitable part of the entire Amazon ecosystem. Very impressive. So cloud is here to stay and presents an opportunity to change the way you do business. In January of 2016, a company called RightScale surveyed over 1,000 technical professionals across a broad section of organizations about their adoption of cloud computing. And in their report, RightScale used the cloud maturity model to segment and analyze companies based on their levels of adoption from beginner to explorer to cloud focused, to very advanced. And a cloud-focused company is heavily using cloud and is actively looking to optimize operations and costs. As in prior years, greater cloud experience continues to unlock increasingly greater levels of value to organizations. Respondents report a growth in the benefits that their organizations get from cloud computing as they mature and use more and more cloud services. So if you are a beginner with the cloud, like many of you may be on this call, the research shows that beginners saw the largest gains in the following areas: business continuity, scalability, how quickly you can scale up or down to seasonal demands, higher availability, and that relates to reliability of your systems, and faster access to infrastructure. You can turn on the cloud services pretty much instantaneously. These gains indicate that as cloud providers and best practices have matured, new cloud users are able to get value more easily and quicker. Unfortunately, cloud computing is perceived by many as less secure, and it's susceptible to the perils of myths due to the nature, confusion, and hype surrounding it. Myths slow us down, impede innovation, and scare us, thus distracting us from real progress, innovation, and outcomes. Sometimes it's considered thought, fear, uncertainty, and doubt of the unknown. So before business leaders like yourself believe in these myths, you should ask yourself a couple of questions, four key questions. Is my data secure? Is my data backed up and readily accessible in an emergency? Is my data available when I need it? And am I assuming my on-premise capabilities are secure? And is this leading me to a false sense of security? To date, there have been very few security breaches in the public cloud. Most breaches continue to involve on-premise data center environments. Cloud service providers can be tested against very high-level security certifications like SSAE 16 for internal controls and financial reporting, PCI DSS for controls over credit card data and fraud, and ISO 27000 for information security management best practices. These providers have world-class mirrored data centers, well thought out and tested disaster recovery plans, and industry-leading security technologies. There are few companies, especially in the mid-market, that can meet the same rigorous level of security and uptime standards that cloud service providers offer. Knowing this should allow you to focus on your business rather than IT infrastructure. There are also many enterprises, not just startups anymore, that are born in the cloud and run their mission-critical applications in the cloud. And finally, what happens when the internet goes down? Well, I'm here today to tell you that the internet never goes down. You simply just lose your connection to it. So if you're rightfully concerned about your company's network connectivity, your problem is larger in scope than connecting to a cloud service provider. So we're going to turn our attention now to the next CPE question, which is stated as, how secure does the audience, or do you believe, cloud-based solutions are versus traditional on-premise solutions? Okay, we just closed this poll, and it looks like about half of the respondents think that their on-premise or cloud is just as secure, and maybe 25% more secure and less secure. So, it looks like, there's still some, trends here that, we could comment on. It really depends on the nature of your business and how much you've invested in security and where you stand on the spectrum. But I'd love to have a conversation, with various participants on the phone as to how they're doing certain security practices and disaster recovery and how it would compare to cloud service providers. So now we're going to turn our attention to NetSuite, and I'm going to talk about why NetSuite. This is an overview of NetSuite. They're a leading provider of cloud-based business management solutions. NetSuite's Business Cloud helps companies manage core business processes with a single, fully integrated system covering ERP, financials, CRM, professional services, automation, e-commerce, inventory, and a lot more. The company serves over 25,000 companies globally and is the fastest growing top 10 ERP system. They're publicly traded with revenue last year of over $700 million and year-over-year growth of 33%. As you can see, listed here are some of the organizations that leverage the power of the NetSuite Business Cloud to run their businesses worldwide. It's interesting to note these organizations range from small to mid-size, as well as large multinationals and their subsidiaries. So what you need today, and John touched on some of these issues earlier in the talk, to stay competitive is a modern system designed around all of your business processes, from the core of your customer financial and billing operations, that allows you to manage the components of your product-based business from manufacturing to inventory to distribution. In addition to managing your service-based business from project-based bids to resource management and optimized billing. And a system that allows all of your internal and key stakeholders to easily access the information in a way that is really tailored to their specific roles and needs. But it's not just about your employees and stakeholders, it's also about extending access to your customers and partners and suppliers, who are the key stakeholders and partners in your business, as well as any external systems that you may want to automate access for in the future. But having a single system to handle your core processes doesn't guarantee that you can keep everyone on the same page or the same system. In order to preserve this kind of investment and support growth, the system has to be able to accommodate your unique business models and unique business processes. You need a system that's customizable through what we call configuration, not software language programming. For example, if your business were to launch a new product, enter a new territory, country, or new market, or introduce a new offering that is entirely different than your existing business, there's almost always a need to modify existing processes or create new workflows. With NetSuite, you can customize without reinventing the wheel. Change only what needs to be changed, and you don't have to endure months-long rollouts and risk to make that change. I also want to briefly talk about some of the visibility NetSuite offers for executives and department heads, employees. What you're looking at is an example of a CEO's dashboard in NetSuite. This dashboard includes some real-time KPIs, or key performance indicators, addressing questions like how profitable are we, what is our average gross profit per invoice, how much new business did we earn last month as compared to last year, as well as an on-time performance metrics and vendor fill rates. If you are a manufacturer, wholesale distributor, or retailer, imagine having real-time reports and KPIs that matter to you at your fingertips. All the different areas of your processes, financial, sales, marketing, HR, across different regions in a single unified system. And all this is real time, so you know how your business is doing and can plan effectively rather than making decisions based on out-of-date data or last month's data. Another big advantage that a cloud solution can provide to you is enabling your employees, if they want, to work from the office or while traveling or from home and from a device of their choice. Since NetSuite is a 100% web-based solution, all they need is a browser. And another key feature is that the NetSuite e-commerce platform allows web merchants to view their social media activity from within their NetSuite account, which can increase conversion rates, provide consumers with a way to obtain instant feedback on merchandising choices, and build valuable prospects. NetSuite is extensible. What that means is their product strategy has been to build a comprehensive ecosystem of proven third-party applications. As a matter of fact, there are over 300 extensions built by some leading third-party developers to run on top of NetSuite to address their specific industry needs. For example, you can link box files directly to NetSuite, incorporate DocuSign into your approval process flow for collecting signatures electronically over the web, process EDI sales orders via SPS Commerce, a leader in that field, or use Adaptive Insights for planning and budgeting and forecasting. To find out more about these suite apps and the marketplace, you can search by industry vertical or business need from the NetSuite website. And for organizations such as law firms, consulting firms, and professional services firms, NetSuite has incorporated OpenAir into its product offering for project and service-based companies. OpenAir delivers real-time visibility into your services organization's performance and profitability. It helps you improve on-time project delivery and drives project success rates. And finally, it equips your services team with mobile access to time and expense management. And as John talked about earlier, Tier 1 functionality without the Tier 1 cost, NetSuite provides low total cost of ownership, also known as TCO. Total cost of ownership is a way of looking at the true cost of owning and operating an ERP system beyond just the original purchase cost and implementation cost. Total cost of ownership looks out over a longer-term horizon, maybe 5 years, and includes soft costs, hard costs, and hidden costs like upgrades and maintenance, security and backups, salaries and benefits of IT staff, as well as infrastructure costs. When you expand the total cost of ownership beyond traditional purchase cost metrics, NetSuite as a cloud solution is less expensive to own and operate over the long term as compared to traditional on-premise or hosted software solutions. Gartner has said it, companies can spend up to 4 times the cost of their software license per year to own and manage their applications. So next up, we are going to present a case study that's been provided by NetSuite about a company called Julep that made the move from QuickBooks to the cloud. In this NetSuite provided case study, we're going to hear from Lisa Booth, who is the Director of Operations. Take a listen from Lisa and hear about Julep's background.
Good morning. Julep Beauty is a vertically integrated beauty retailer, and what that means is that we produce our own beauty products, skincare, makeup, nail products, etc. And and we sell them both directly to the consumer through our Maven program and our online site, and we also sell to stores such as Sephora and Nordstrom. And we switched over a year ago from QuickBooks into NetSuite, and we did it for many of the reasons why your panel, the community that has done it, which is that we are rapidly growing, and we just had surpassed our ability to be on QuickBooks, and we wanted to be able to integrate our manufacturing side of the business and our financial side of the business so that we could see everything in one place and we could make better decisions and people have better access to accurate information.
So when Lisa from Julep was asked about what prompted her company to look at NetSuite, she described the key challenges they were facing at the time with their QuickBooks-based accounting system.
The challenge with QuickBooks is that it was completely disconnected with everything else. So we were not able to pull product costs, we were not able to see inventory, everything was one-off, and so the team that was running our supply chain wasn't tied into our financials, and our accounting team wasn't tied into our inventory model. And so by bringing that stuff together, we got rid of spreadsheets, and now the statement around Julep is, well, I need information, and everybody just logs into NetSuite and gets it directly, and we all know that we're operating on the same set of information.
So also when Lisa was asked a follow-up question about why the cloud, which is on everyone's mind, listen to her response.
Well, for Julep, our focus is on our beauty products, our focus is on our customer, and we are not a company that's focused on back-end infrastructure for systems. It's not our core competency, it's not what drives our business. And what we have found has been fabulous is knowing that NetSuite is responsible for maintaining the servers and having the staff that does that type of thing for us, so we can be purely focused on our business functions. And making sure our business functions are optimized and our business processes are streamlined. And we simply, if we have a back-end issue, we can just pick up the phone and call going support for NetSuite, and we know that they take care of things. They manage the upgrades, and so we don't have to use our resources and our capital to hire a staff and maintain servers because it's not in our competitive advantage. So the cloud has been phenomenal for us.
And finally, in this case study, Lisa was asked about some of the improvements in Julep's financial and operational processes. She went on to describe improvements in the month-end financial close, process improvement, and broader organizational understanding as the key metrics and information. Take a listen.
In terms of our ability to close the books on a monthly basis is dramatically increased. You know, both in terms of moving NetSuite and changes in our organization, we now close our books on a monthly basis. Like a larger publicly traded company, we have auditable processes that we can support an external audit. And that has been the biggest changes in our financial processes. Organizationally, the other big change is that now, whereas before the finance team understood the information, you know, in terms of our COGS and, you know, when we were selling things, how we were setting prices and our profitability and those types of things, now the broad organization has access to that. And for key metrics across our organization, we're able to allow people on their dashboard to have KPIs readily visible.
Okay, so hope you enjoyed listening to Lisa from Julep. We're now going to turn to the fourth and final CPA question. What's your time frame for making a decision on a new business system? So, you know, it looks like from the results of the poll, maybe half the people have no time frame set, but it sounds like, you know, a quarter of the people are maybe resonating with some of the top 5 reasons John mentioned as issues. And we can certainly, if you have some questions about specifics after this meeting, we can have some follow-up conversation about your specific needs. So that brings us to the end of our case study and the end of the webinar and the end of the CPE questions. Before we turn to the audience for questions, I just want to make some concluding remarks. When looking at this from CohnReznick's experience with migrating clients from point solutions, generally the reasons are spelled out right here in front of you on this concluding slide. If any one or more of these challenges is a reality for you, then we recommend it's time to consider the benefits of the NetSuite Business Cloud. Everything is moving to the cloud, and NetSuite is clearly a leading cloud ERP. And at CohnReznick, as a certified NetSuite solution provider, we can manage and lead the implementation. We have industry specialization and apply change management and program management expertise to your project. At CohnReznick, our NetSuite practice area is part of a broader CIO advisory services practice where we help companies find the right ERP to meet their ever-changing business needs. But CohnReznick can help assess if it is the right fit for you and your company by performing a fit gap analysis as well as assessing how you would migrate to a new solution such that you address the top 5 reasons presented today. So we'll just take a minute here. A couple of questions are coming in, so I'll read them off in a second. Okay, here's a question from an audience member. What type of uptime guarantees does NetSuite provide? Performance guarantees? How do they make sure I have enough horsepower to run the system? So NetSuite's cloud-based and it's virtual, meaning that more horsepower can be added to running computers and services and can be swapped in, and it scales very quickly. NetSuite also provides guarantees of uptime of 99.5%, and customers will receive credits of service if NetSuite does not deliver on that promise. Over the past 12 months, their performance has been at 99.98%. And also, NetSuite being cloud-based is accessed by a browser, allowing you the flexibility to access it from any connection. So we recommend reliable, carrier-grade, commercial-grade internet connectivity. Okay. Okay, can you compare, here's another question that came in, can you compare NetSuite to Salesforce.com? So that's a common question. For those of you who are not familiar, Salesforce.com is a leading CRM or customer relationship management package, and we're asked that question a lot. The core strength of Salesforce is CRM. It's not a full ERP. NetSuite's built around ERP, finance, distribution, and manufacturing, and includes CRM. We've seen many mid-sized companies use Salesforce.com with NetSuite, or you can evaluate them separately and use the CRM capabilities in NetSuite directly. So the lack of integration and having a single system in NetSuite is a tremendous advantage in simplicity, cost, and timeliness if you were to use the NetSuite CRM. Okay, another question just came in. Does NetSuite have a purchasing module? And the answer is yes. It has a full procurement purchase-to-pay module that is included in the base package and ties into inventory and receiving and the general ledger. And final question, does NetSuite have MRP? NetSuite has demand planning and replenishment capabilities that are part of the purchasing module and the inventory module. So the answer is yes. Okay. Another question just came in. Is NetSuite a subscription-based service? And the answer is yes. So it's not a traditional software model, as John talked a little bit about that earlier. It's a service that's paid for as a subscription on a yearly basis based on the number of users and the modules you use. So you can scale up and down as your business grows and changes. You don't buy a perpetual software license for on-premise.
And just to build on Mark's point there, I had mentioned the difference between cloud and a subscription model. So, what's common is a subscription model called SaaS, software as a subscription and as a service. And a lot of companies or vendors are offering software that they would host in a SaaS model, but that's really more of a licensing and billing structure. So the difference is NetSuite is truly a cloud solution, and it's different from just a SaaS licensing. It's the way it's architected and the way it's managed and supported by the vendor that's very different than just having a hosted or managed service type of provider.
Okay, so that brings us almost to the top of the hour, and I'd like to thank you for joining today's webinar. We hope you gained valuable insight that you can use for consideration and decisions going forward, and look forward to hearing from you after this call and in the future. Thank you.
And there may be other questions that come to mind based on the contents of the presentation, and we would be happy to address those after this webinar. And we, like Brian said, we'll be sending out the deck to everyone so you would have our contact information. Be happy to hear from you. Thanks, everyone.
Thank you.